GM soldiers, in today's video I'm going to explain you how to use the TradingView indicator called Gaps plus Imbalances plus Wicks multi-time frame by Leviathan Capital. This indicator basically highlights the fair value gaps, the imbalances and the wicks on the chart depending on the time frame that you select in the top part of the TradingView chart. So first of all, to load this chart into your TradingView account, you need to go here into the indicators tab and search for gaps plus imbalances. Okay, you can see here this indicator by Leviathan Capital that has almost 3,000 people that is using it. Also, if you want, you can read the indicator description here where Leviathan explains you pretty well all the functionalities and all the settings that you can use in this indicator. But I'm going to cover these functionalities and this setting on this video, so you don't have to read that, and I'm going to share with you also my personal preferences and also how to use this indicator in your actual trading strategy to make money from the markets. So once we have loaded the indicator here, we have loaded the indicator into our TradingView chart, we can go here into the settings tab of the indicator. Here we have three different types of zones that the indicator will highlight on the chart. We have the imbalance, that are these ones, the imbalances. Then we have the gaps, okay, and the wicks. I don't know why the gaps functionality is not working to me today. I don't know why, but the wicks highlight the wicks of the price. Okay, you can see here all the wicks of the price that got rejected from a support area or resistance area, and indeed they highlight an area with high liquidity sitting there, so the market is prone to bounce to the opposite side from these areas. You can see here rejected and then bounce to the downside, rejected, then bounce to the upside, rejected. Here was a fake out. Okay, here it confluence with the wick with an imbalance, so the market pumps to the opposite side. Okay, but I prefer to use this indicator with the imbalances option. Okay, here you have selected the chart. The time frame will be the one that you have selected into your chart. Okay, so if we switch to 2 hours, you can see here that these imbalances are, for example, in the 120 minutes. Okay, you can see here that in little we see a tag that says 120 minutes, that is 2 hours. If you switch to the 3 hours, you will see that every imbalance that this indicator takes into account, every signal that this indicator is taking into account from the chart, depends on the time frame that we are using. If, for example, we switch to the 15 minutes, you can see that the imbalances that the indicator finds are regarding the time frame that we have in the indicator or in the TradingView chart. Okay, that's the cool feature about this indicator, is this one, that it uses the time frame that we are using in our chart. For this video, I'm going to use the 4-hour time frame. Okay, the 4-hour chart. So all the signals that you are going to see here will be regarding the 4-hour time frame. So now that we have covered the main functionality, that is selecting the imbalances, gaps or wicks, I prefer to use this as imbalances. As I said before, I like to leave this chart option activated by default. Also here you can change the colors of the indicator, how it displays the bearish imbalances or the bullish imbalances. Okay, in this case the bearish are in like purple and the bullish are in blue. And also you can select here the fill condition, if you want it to be filled, the imbalances, as a touch, as a full fill. Okay, if the wick needs to go all the way through, or also if half filled. Okay, for myself, I like to use it as a touch. Okay, you can select depending on your trading style and your trading rules or your trading system rules. You can change this setting, but I prefer to leave it in touch. Also, the look back period 150 is a good look back period as it comes by default, so I will not change it. And also a very important feature that this indicator has is the high fill levels. If we switch on, we can see that the past levels that were filled in the past disappear from the chart. You can see here this is a not fill, already not fill level, that is an active imbalance. Okay, so the indicator is printing this imbalance because it's still active. This area, this liquidity zone, is not mitigated yet. So the indicator is leaving this area active on the chart. But if we deactivate this option, you can see also the imbalances that were filled, that were acting as resistance or as support in past price areas. Okay, but for the sake of this video, I will leave it disabled, because I want to explain you how you can apply this indicator into your trading strategy. Also, the filter type will be the ATR. Okay, leave it these settings by default. And also here you can change the labels of the imbalances. Okay, the zone labels, you can change the labels that are printed, and also the size of the letter of the font and everything. These are minor changes to the indicator, but you can customize it, and it's also a pretty cool feature. So now, how can we use this imbalances, gaps and wicks indicator to make a trading strategy and to try to beat the market, or to make a trading system based on this indicator? So, as you should already know, imbalances or fair value gaps are areas where a lot of liquidity, or order blocks in this case also, we can call it this way, are areas where a lot of liquidity or a lot of limit orders, so liquidity, was sitting on the market or is sitting on the market. So for example, in the past, we can see that the price pumped, leaving an imbalance here, okay? Here, the price rejected, pump, and here leaves an imbalance. This imbalance got filled, okay? You can see that the price retraces here, acting as support, so we can see here rejection by the candles. Again, the price pumped. We can assume that here a lot of people were putting their stop losses, because the price pumped, retraces, retests this support level that in the past was acting as resistance. So here was resistance, then got pierced with momentum, then goes back and act as support. So we can assume that a lot of people that were jumping long here put their stop loss below the support area, trying to catch the pump. Okay, so this is one thing that you need to be aware, that the price oftentimes pumps, generate an imbalance, then the price retests these imbalances, confirming the support. But as this support is very obvious, a lot of people is putting their stop loss below this support area. Okay, then the stop loss gets triggered again, so a retest again, and then the price goes into the take profit, into the initially take profit area. Okay, this is a common thing that markets do to positioning. This is because of positioning, because here was a large amount of long positions clustered into the market, so a lot of positioning were long here, and the price retraces to trigger all the stop loss, all the liquidity limit orders sitting around this area, and then retraces. Okay, this is one example. Another example, for example, here the price pump, generating an imbalance, then the imbalance got filled, and then the momentum flipped to bearish. Okay, you can see this candle leaving a bearish imbalance, confirm that the trend was switching to bearish, because this bullish imbalance was completely filled, and then here this candle confirmed that the momentum was bearish. As you can see, the market continues into the downtrend, and then another big candle with a bearish imbalance. Then the price finds liquidity, the price shows you rejection, leaving here a bullish imbalance with bullish momentum, and here the market is switching into a bullish trend. Okay, so as you can see, basically this indicator with the imbalances is telling you the story of what the market is doing. Okay, if you analyze the price action, so the candle, the momentum of the candle, the momentum of the candles, you can see here the impulse candles. Here is an impulse candle, bullish impulse candle, generating an imbalance, a bullish imbalance. Here is a bearish impulse candle, generating a bearish imbalance. So if you spot these areas, you will know where is the momentum of the market. If the momentum is in a downtrend, so you can position yourself short, and if the momentum switches to bullish, you can position yourself long. Okay, obviously this indicator you can see the same things as this indicator is giving to you the signals, just looking at the price action and at the volumes, okay? But with this indicator, there is a more visual way to see these imbalances and to know where the momentum or the impulse candles of the market are leaving the imbalances behind. So they are telling you where the price is heading, if it's heading to a bullish uptrend or a bearish downtrend. Also, you should note that these imbalances should also act in many times as resistance areas or areas where a lot of liquidity was sitting there, okay? Because imbalances oftentimes act as areas where the price indeed was pierced this level with a lot of momentum, leaving a lot of liquidity below or above these areas. In the case you can see here, in this case you can see here the bearish momentum, and then the price goes to retest this area because here the price pierced too quickly. A lot of people were not able to jump in, so it's leaving an inefficiency, an imbalance, and then the price retests before continuing the bearish trend, okay? Here the same, we have an imbalance, the price retests and then switches to the opposite side. So these imbalances that this indicator prints in the chart are not also to see where the momentum is heading and if we are switching or continuing to a bullish trend or a bearish trend. Is also, you should also consider these imbalances as a high probability area where the price could retest, okay? You can see here this bullish imbalance here, the price pumped, then retest the imbalance, mitigated the imbalances, so the price was efficient here. The price is being efficient because it mitigates the imbalances, not leaving behind inefficiencies in the market, and then as the price action rejects from the area, pumps to the opposite side. Here we have another impulse candle, another bullish imbalance, and then the price retests this liquidity area where the imbalance was generated, and then keeps pumping to the upside where the momentum is heading the price, okay? So you can use this as high probability areas where the price wants to go. You should see, for example, this bearish imbalance that we have here still active, because this is an untouched imbalance. We have a higher probability that the price keeps, for example, pumping to mitigate this imbalance. Because if we apply the theory that imbalances are oftentimes acting as a magnet for the liquidity or for the price, they have high liquidity areas where a lot of limited orders are waiting there to be filled, selling limit orders in this case, because it's a bearish imbalance. So we can assume that the price sometimes or later, sooner than later, will try to revisit this area because it's a high liquidity area. It's an area where the price likes to retest. So we can assume that the price now can pump, retrace, and then pump and try to mitigate this bearish imbalance. Also, if we can find some bullish imbalance here, I don't know, because the indicator, the look back period of the indicator is just 150 candles. But if we switch this to, for example, 500, okay, we can see that some bullish, okay, you can see here some bullish imbalances, okay. So for example, here the price, if we retrace, if the price retraces, the first areas that we are going to revisit will be 43k, 40k, and 32k. Okay, you see here the big imbalance areas where a lot of liquidity is sitting there to fill the long positions. A lot of limit orders we can assume that are waiting here to get filled into these areas. And as resistance we have this bearish imbalance here in 70k. Okay, but this, you can only see these imbalances. For example, here you have an imbalance, then another imbalance got filled. As you can see here in the past, the price did the same, tries to mitigate the imbalance. Once the imbalance is mitigated, you can see this bullish imbalance. The imbalance acted as support because was a high liquidity area here, and you can see obviously the price is showing you rejection from the price action. Okay, you can see here rejection in the 4-hour candles, and then the price reverses into an uptrend because it got filled this imbalance. Okay, you can see that the theory that I am explaining here is behaving the way that I predicting to behave. Okay, you can use these imbalances as support and resistance areas, so a high liquidity areas, so high supply and high demand areas, and so there are areas where the price is high probability of the price revisiting these areas. Okay, I think that with this explanation that I made, this indicator, the imbalances of this indicator are pretty well covered, so you have understand the concept behind this indicator and how can you develop a trading system or a trading strategy based on this indicator, basically using the bullish imbalances as support areas and the bearish imbalances as resistance areas, okay, or SR levels or supply and demand areas, okay, to predict where the price is going to head next, is heading next. Okay, so if you have any questions about this indicator or about my explanation that I did here about this indicator, please leave me a comment on this video and I will try to answer your comment the best that I can, your questions the best that I can. Also, if you like this video, please leave me a like. This way the algorithm on YouTube will help boosting my content to more audience, so you will help me grow my channel and also the community will grow bigger and stronger together. So leave a like, leave a comment if you have any questions, share the video with someone that will love to see this kind of content and will try to, let's say, learn from my content. Also, you can follow me on X or Twitter, as we call it right now, X, where I've publish there daily trading setups, daily trading market analysis, daily trading news that are relevant for you as a trader. And also I publish many trading signals for free and many trading setups that you can follow based on my analysis. So if you want to have a close contact with me, follow me on Twitter X, where I publish daily updates. Also, you can find me on Instagram and on Rumble. So thank you for your time and we see you in the next video.